Crypto Hotep here with another investing video. We are on week 51 of the Family Portfolio and Dividends Tracker. Now, if you're unfamiliar or if this is your first time watching the video, feel free to go to my channel, go to week number 1, and that's where I break down the methodology between this whole series. So basically, in a nutshell, I made a short list of blue chip, recognizable companies / stocks for my family to choose from. They made their choices of the companies that they felt most resonated with them or the ones they liked, and then we proceed to use M1 Finance as our broker of choice. With M1 Finance, you can make a big portfolio and then have sub-portfolios in it. Each of our family members has a sub-portfolio with his or her own stocks of their choosing. And then every week, we go through this portfolio, we go through our emotions, our thoughts, any news that's in the market, and any dividends and balances as well. These videos are for my own edification first and foremost, and they're more so to track the investment journey with my family. If you find these videos helpful, feel free to like, subscribe, comment, let me know what you think. But by any means, by no means at all, is this financial advice. With that being said, we'll jump in. Before we go to week 51, we go to week 50 and we look at where we were at. So at week 50, our balance was $18.91.13. Our dividends earned was $3.49. Our market gain was negative $18.77 with a money weighted rate of return negative of 0.86%. The market was dipping a little low. So this week, our balance increased to $19.52.14. Our dividends earned were $5.22. Our market gain is still at a negative, though, of negative $53.26, and our money weighted rate of return is still negative at negative $2 or 2.65%. But Crypto Hotep, your balance increased, so why is the market gain still negative? Well, glad you asked. The reason is because last week we mentioned that our oldest was going to deposit money in here, and that's where it is. So last week we had our oldest deposit $94 of their own money, and they wanted to invest in their stock. That brought a tear to my eye, guys. It was great. It was a great feeling. So let's see what happened. Now, before that, we did get a dividend of 57 cents from Starbucks, and then we proceeded to make 4 buys with the $93.95. And I mentioned this last week. These were the buys: Apple, Costco, McDonald's, and Tesla. And then you can see here the amounts that we did buy as well. Okay. So let's go back. So those were the buys. We also had more dividend action here. So we had Visa, 4 cents. Aflac paid us 13 cents. Church & Dwight paid us 3 cents. Target paid us 39 cents. Smucker Company paid us 8 cents. Kroger paid us 4 cents. Johnson Johnson paid us 26 cents. And then TJ Maxx paid us 2 cents. In addition to that, with those dividends, we were able to make 1 buy as well, and we bought more Google stock. And that's the big thing with dividends, and that's what we preach here, is that with the dividends, we consider it a snowball effect. As all of this snowball, or these snowflakes, if you will, when they start gaining momentum and they start getting into snowballs, we're able to make buys for more stock. And not only that, we got a Pfizer payout of 43 cents on March 7th here. So let's go back to the portfolio. And as we always do, let's go bottom to top. Unfortunately, wife's still on the bottom here. Her balance is 154.18. Negative rate of return of negative 7.3%. Negative market gain of $10.89 with dividends earned of 43 cents. Celsius Holdings is actually doing pretty well for her right now. If we click in here, we can see that the price per share for Celsius has grown to $27.39, which is great. Our average share price, though, currently was $39.21. So we have a little ways to go. I like the trajectory right now of Celsius and how they're looking currently. So within the day, you can see that the trajectory of Celsius is up. It's up over 8% currently. And I think it's hit that bottom. And as of right now, I think the momentum with Celsius is upward only. So we will see. We are still buying Celsius and at the dips. Pepsi is up over 3.45%. Google is down over 10%. And then Tesla slowly bleeding out here, down over almost 40% here. Not really concerned about that. If you invest in Tesla, you have to be very accustomed to that volatility. Let's go to our middle stock. Our middle stock is actually down. And this is usually the most consistent stock portfolio we have, but this is down because the market is down currently. So negative 3.33% return, negative $6.75 return, dividends earned of 60 cents with a balance of below $200 now at 198.54. What has been dragging our middle stock down? Well, Tesla. Again, we made a big bet on Tesla as a family, and this is good. This is a good thing to see, because you have to realize that if you do have conviction with a stock, you do have to ride the waves with that stock. Now, if it's a fly-by-night company, then it's a crapshoot. It's a gamble. But if it's a solid company that you believe in the future of it, then and you do have conviction in it, and it's very volatile, you have to understand that, and understand that those waves will come. And right now we're on the down wave for Tesla, down over 38% here. Nintendo's still up over 19%. Amazon down over 10.5%, which is a very fantastic buy with Amazon, I would suggest. Not financial advice though. Target down over 15%, still a good dividend stock to hold. And then Costco, again, Costco, one of the most consistent stocks, one of the most consistent companies there are, up over 5%. Starbucks up over 17%. Let's go to our youngest. Our youngest is actually the first in the green here at a positive 0.86%. Return year to date, $1.52. Market gain, dividends earned of 33 cents with a balance of $240.49. So where are we at? Similar. Nintendo up over 19%. Apple down negative almost 2.5%. But Starbucks up over 17%, as with our middle. And then Tesla again. Tesla showing its ugly head right now, down over 38%. Again, not really worried about that. Like to see Nintendo still holding above 15% here. Apple at a negative almost 2.5% is a great buying opportunity to me. Okay. And my stocks, we are looking at a positive 1.81% return, market gain of $8.83, dividends earned of $2.49. My balance is at $659.53. Now, this doesn't surprise me at all. Technology, being one of the most volatile sectors, is down over 8.5%. That's fine for me. That's good for my risk tolerant level, because even though it's the biggest portion of my overall portfolio, I understood that going into it. Same thing if you go to right here, the growth and meme stocks, down over 7.85%. Well, that's not a lot of my portfolio. That's only 5%, but I still wanted to have a little volatility, more so than technology, in here. Everything in between, we're in the green, looking mean here, okay? And so what I mean is industrials and energy is still up over 8.5%. Consumer staples up over 2%. Finance up over 1%. Restaurants and food up over 12% here. Who's leading the way? One of the GOATs, Coca-Cola. Coca-Cola had great earnings. And again, we are up over 14%, almost 15% with Coca-Cola. Starbucks continuing that wave, as with my other family members, up over 17%. And then Domino's Pizza, 12.5%. Texas Roadhouse down less than 1%, but I'm not really worried about that currently. So restaurants and food are holding the weight, which is amazing to see here. Real estate up over 3%, and then pharmaceuticals up over 9%. Again, this I will task you with doing this. Go to weeks, say 40 to 50. I would say go to weeks 40 to 45 and look at those balances particularly in my stock portfolio and dad's stocks, and go to pharmaceuticals because pharmaceuticals was down, bleeding in the red, and now it's flipped the script up almost 10% as we said it would be. Again, you're investing in great companies, long-standing companies. Johnson & Johnson and Pfizer are not going anywhere. They've been around for decades, almost a century, or almost centuries here. So the big thing with them was the administration coming into it. A lot of that spooked pharmaceutical companies because of the administration head for the director of health. Now that that information and that news has subsided, now we can get back to business at hand, which is number go up. So very good to see here. Okay. But all in all, I'm not worried about this, about my portfolio at all. I like where my stocks are. I'm not really adding anything right now. And we can go to our oldest. Now, our oldest, as you saw in the activity side, our oldest bought multiple stocks in their portfolio, kept it simple and easy. And that's why our oldest has a bigger balance and is number one, the top now. So we still do have a negative weighted rate of return of negative 6.92%, market gain of negative $45.96 with dividends earned of $1.37. The whole portfolio for our oldest has ticked below 700 at $699.41. That's all good though. I'm again not worried about that because we only have 4 companies in this portfolio and they're all great long-standing companies. Apple, McDonald's, Costco, and Tesla. We just bought the dip on all of these as you guys did see. But Crypto Hotep, what happens if the dip keeps dipping? We'll consider that more opportunity. Remember that we are investing into good companies. We are not looking for penny stocks when we're investing. Now we can trade penny stocks all you want, but I'm not trading stocks really on the M1 Finance app. The M1 Finance app is more so for passive investing and long-term investing. And so that's why it behooves you to invest in research in quality companies and quality stocks so you can battle with the ups and downs of the market, but still feel confident that your money will grow over time. And so with that being said, our oldest has a negative almost 7% weighted rate of return. Are we worried about these stocks? No, I'm not really worried about that. But Crypto Hotep, Tesla's down over 30%. True, but I believe overall in that mission of Tesla, yeah, the EVs are getting hit. But again, we have a rocket ship piece that you can relate to Tesla. We have other pieces such as the robots for Tesla. So I think we're just going to give this some time and let it marinate. And with that being said, guys, we will close this one out. So week 51 ended with a balance of $19.52 and 14 cents. Dividends earned of $5.22. Market gain of a negative $53.26 with a money weighted rate of return of year to date of negative 2.65%. As always, if you found these videos helpful, feel free to like, subscribe, comment. Let me know what you think. As always, thank you and happy investing.